Here are the crypto top headlines covered in this video. Bitcoin explodes to new 26-month high of over $53,500, leaving almost $200 million in liquidations. Next, AI-focused altcoin rallies after Coinbase places crypto project on listing roadmap. Also, how can crypto firms bridge the gap with traditional finance? Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: Bitcoin explodes to new 26-month high of over $53,500, leaving almost $200 million in liquidations. Nearly 60,000 traders were wrecked in the past day. The price of the largest cryptocurrency by market cap took a sudden liftoff and shot up by more than $2,500 in minutes to a new 26-month peak of over $53,500. The altcoins have also turned green, with ETH soaring even further above $3,100 and BNB nearing and briefly surpassing $400 for the first time since May 2022. Crypto Potato reported earlier that BTC's price had stalled as the asset was unable to overcome $52,000 during the weekend despite a few attempts. As such, Bitcoin had declined to $51,000, and it seemed like the consolidation around that level would continue. However, that wasn't the case. The bulls took charge of the market minutes ago and initiated a massive leg up that resulted in BTC soaring by nearly $3,000. Consequently, the cryptocurrency jumped to $53,750 on Bitstamp for the first time since December 2021. Despite losing some ground since then, BTC still trades above $53,000, and its market cap has exploded to $1.05 trillion. Many altcoins have turned green as well. Ethereum, which soared past $3,100 earlier today, is now trading above $3,150, following a 3.5% daily increase. Binance Coin briefly surpassed $400 to chart a new multi-year peak as well. MATIC, NEAR, XMR, and INJ are up by more than 5% on a daily scale. This volatility has resulted in pain for over-leveraged traders, as the 24-hour value of all wrecked positions has gone to $172 million, according to CoinGecko. Naturally, the majority of them come from short positions. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: AI-focused altcoin rallies after Coinbase places crypto project on listing roadmap. An artificial intelligence altcoin project is rallying after the top U.S. crypto exchange, Coinbase, announced a possible future listing of the token. In a new announcement, Coinbase says it is adding a cash network, or AKT, to its listing roadmap, which alerts customers that the exchange could soon add support for certain assets. As the news broke Monday, AKT shot up from a day low of $3.91 to $4.38 at time of writing, a more than a 10% gain. Akash Network is a decentralized open-source cloud network that supports decentralized finance, or DeFi, applications and organizations, as well as machine learning, blockchains, and AI. The listing roadmap was created in 2022 to increase transparency and reduce the possibility of investors front-running new trading support announcements, according to Coinbase. Influential figureheads within the crypto industry have been bullish on AKT as of late. Venture capitalist Arthur Cheong said AKT is a project with huge upside potential. Said Chung, an extremely promising project with good fundamentals and industry tailwind, 2 times over a week while almost no one on crypto Twitter talks about it. A good validation that you don't have to chase every short-term narrative to make outsized gains, as this tailwind has been active since January. The pseudonymous trader known as Altcoin Psycho called AKT his new favorite altcoin back in 2021 and recently predicted the project's market cap will grow to place it among the top 50 digital assets. AKT currently ranks 91 with a market cap of $987.6 million. Our next top headline: how can crypto firms bridge the gap with traditional finance? While there have been some small steps forward, the worlds of crypto and traditional finance are still oceans apart. There have been some hard-fought victories to better integrate cryptocurrencies and traditional finance. A case in point, the approval of the first spot Bitcoin exchange-traded funds in the United States on January 10th. The U.S. Securities and Exchange Commission's approval of the ETFs may herald further capital inflows and greater institutional participation in the crypto market, but digital assets have yet to make inroads into the banking sector and the vast majority of financial institutions. Furthermore, the reluctance with which the SEC finally approved the ETFs is worth remembering. The SEC rejected multiple spot Bitcoin ETFs from multiple challengers, with its first refusal dating more than a decade back to July 2013. Eventually, as large fund managers from the traditional finance or TradFi world, such as BlackRock, got involved and legal action surrounding Bitcoin ETFs was concluded, the SEC approved. In a statement on January 10th, SEC Chair Gary Gensler said, "While we approved the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin. The approval, as begrudging as it was, meant 10 years of denials were finally over." Elsewhere, the industry faces multiple challenges for acceptance in what remains a largely TradFi world. A challenging marriage. Old money may be softening to crypto and blockchain, but the union remains a difficult one. Bob Rass, co-founder of Corium, a blockchain protocol developing smart tokens for tokenized securities and real estate, told Cointelegraph that regulators have long been skeptical of crypto projects, even those with the intention of adopting traditional industry standards. Rass experienced this firsthand during the development and launch of Sologenic, a platform he co-founded for trading tokenized stocks. "We saw the gap between the traditional financial market and blockchain assets," Rass said. "So we started a project called Sologenic. Sologenic bridges the traditional financial market with crypto assets. During those days, the idea was to obtain a MIFID, or Markets in Financial Instruments Directive, license, a security broker-dealer license inside Europe. But the journey to a broker-dealer license was fraught with difficulties. Unfortunately, they wasted 2 years of our time," said Rass. Given the intransigence of European regulators, Sologenic decided it would instead offer tokenization solutions for institutions only, sidestepping the need for a MIFID license. Decentralization and control. While regulatory burden plays a role in the separation of TradFi and decentralized finance, or DeFi, another divide comes from differing philosophies in how finance should operate. Sologenic initially ran on the XRP Ledger blockchain, but the specific needs of the platform drove the Sologenic team to build Corium, a Layer 1 blockchain with smart contract functionality designed to comply with institutional demands. During the development phase of Corium, Sologenic had to consider why TradFi and blockchain remained distant despite all the efforts to merge the two. The answer wasn't simple. Right now, if you look at all the blockchains in the world, there's no blockchain that is focused 100% on enterprises, said Ras. No blockchain that is in 100% in compliance with the banking standard ISO 20022 that has AML, or anti-money laundering, and KYC, or Know Your Customer, on-chain. A more fundamental issue was also at play. DeFi makes institutions nervous. As Ras explains, no financial institution actually utilizes blockchain technology significantly. We had some cases, but the mass adoption is not there. We have to ask the question why. I think it is because financial institutions have to stay within the regulatory framework. Ras told Cointelegraph that a lack of checks and balances makes traditional institutions balk. Without it, they can't guarantee they won't fall foul of regulations, so you need to give them some level of control in order to get them to adopt the technology. Ultimately, Corium decided the best way forward was to provide administrative-level powers for regulated financial entities. Bridging the gap, the approval of a spot Bitcoin ETF may be a sign that the stock market is ready for crypto, but the financial sector may prove to be a tougher nut to crack. There is still strong crypto skepticism for many in the sector. On February 22nd, the European Central Bank issued a report about the possibility of a spot Bitcoin ETF in Europe. The report's title, ETF Approval for Bitcoin, The Naked Emperor's New Clothes, is instructive. Suffice it to say that report authors Ulrich Benzel, Director General of ECB's Market Infrastructure and Payments Division, and Jürgen Schaaf, an advisor to the same division, are not big crypto fans. Changing hearts and minds in the traditional finance sector is a major challenge. So while TradFi and crypto are becoming more closely connected than ever, much work still needs to be done. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.